The following are examples of facts and circumstances within each of those categories of threats that might create threats for a professional accountant when undertaking a professional service. Number one, self-interest threat. A professional accountant having a direct financial interest in a client, a professional accountant quoting a low fee to obtain a new engagement, and the fee is so low that it may be difficult to perform the professional service in accordance with applicable technical professional standards for the price. A professional accountant having a close business relationship with the client, a professional accountant having access to confidential information that might be used for personal gain, a professional accountant discovering a significant error when evaluating the results of a previous professional service performed by a member of the accountant's firm. I repeat, a professional accountant discovering a significant error when evaluating the results of a previous professional service performed by a member of the accountant's firm. Next one, examples of self-review threats. A professional accountant issuing an assurance report on the effectiveness of the operation of financial statements after implementing the systems. A professional accountant having prepared the original data used to generate records that are subject matter of the assurance engagement. Advocacy threats. A professional accountant promoting the interest of or shares in a client. A professional accountant acting as an advocate on behalf of a client in litigation or disputes with third parties. A professional accountant lobbying in favor of legislation on behalf of a client. Next one, familiarity threat. A professional accountant having a close or immediate family member who is a director or officer of the client. A director or officer of the client or an employee in a position to exert significant influence over the subject matter of the engagement, having recently served as the engagement partner. An audit team member having a long association with the audit client. Intimidation threats. A professional accountant being threatened with dismissal from a client engagement or the firm because of a disagreement about a professional matter. A professional accountant feeling pressured to agree with the judgment of a client because the client has more expertise on the matter in question. A professional accountant being informed that a planned promotion will not occur unless the accountant agrees with an inappropriate accounting treatment. A professional accountant having accepted a significant gift from a client and being threatened that acceptance of this gift will be made public. Next one, the following are examples of facts and circumstances within each of these categories that might create threats for a professional accountant when undertaking a professional activity. Self-interest threats. Examples are a professional accountant holding a financial interest in or receiving a loan or guarantee from the employing organization. A professional accountant participating in incentive compensation arrangements offered by the employing organization. A professional accountant having access to corporate assets for personal use. A professional accountant being offered a gift or special treatment from a supplier of the employing organization. Next one, self-review threat example. A professional accountant determining the appropriate accounting treatment for a business combination after performing the feasibility study supporting the purchase decision. Advocacy threat. A professional accountant having the opportunity to manipulate the information in a prospectus in order to obtain favorable financing. Familiarity threat. A professional accountant being responsible for the financial reporting of the employing organization when an immediate or close family member employed by the organization makes decisions that affect the financial reporting of the organization. A professional accountant having a long association with individuals influencing business decisions. Intimidation threat. A professional accountant or immediate or close family member facing the threat of dismissal or replacement over a disagreement about the application of an accounting principle, the way in which the information is to be reported, an individual attempting to influence the decision making process of the professional accountant. For example, with regard to the awarding of contracts or the application of an accounting principle. Specific circumstances give rise to unique threats to compliance with one or more of the fundamental principles. Such unique threats cannot be categorized in either professional or business relationships. A professional accountant in public practice should always be on the alert for such circumstances and threats. Evaluation of threats. The conditions, policies, and procedures described above might impact the evaluation of whether a threat to compliance with the fundamental principles is at an acceptable level. Acceptable level. An acceptable level is a level at which a professional accountant, using the reasonable and informed third party test, would likely conclude that the accountant complies with the fundamental principles. Number 2, reasonable and informed third party. The reasonable and informed third party test is a consideration by the professional accountant about whether the same conclusions would likely be reached by another party. Such consideration is made from the perspective of a reasonable and informed third party who weighs all the relevant facts and circumstances that accountant knows or could reasonably be expected to know at the time the conclusions are made. The reasonable and informed third party test does not need to be an accountant but would possess the relevant knowledge and experience to understand and evaluate the appropriateness of the accountant's conclusions in an impartial manner. Next heading, addressing these threats. If the professional accountant determines that the identified threats to compliance with the fundamental principles are at an acceptable level, the accountant shall address the threats by eliminating them or reducing them to an acceptable level. The accountant shall do so by eliminating the circumstances, including interest or relationships, that are creating the threats. Applying safeguards where available and capable of being applied to reduce the threats to an acceptable low level, or declining or ending the specific professional activity. Actions to eliminate the threat. Depending on the facts and circumstances, a threat might be addressed by eliminating the circumstance creating the threat. However, there are some situations in which a threat can only be addressed by declining or ending the specific professional activity. This is because the circumstances that created the threat cannot be eliminated, and safeguards are not capable of being applied to reduce the threat to an acceptable level. Safeguards. Safeguards are actions individually or in combination that the accountant takes that effectively reduce the threat to an acceptable level. Safeguards vary depending on the facts and circumstances. Examples of actions that in certain circumstances might be safeguards to address the threats include assigning additional time and qualified personnel to required task when an engagement has been accepted might address a self-interest threat. Having an appropriate reviewer who was not a member of the team review the work performed or advise as necessary might address a self-review threat. Using different partners and engagement teams with separate reporting lines for the provision of non-assurance services to an assurance client might address self-review, advocacy, and familiarity threat. Involving another firm to perform or re-perform part of the engagement might address self-interest, self-review, advocacy, familiarity, or intimidation threat. Separating the teams when dealing with matters of a confidential nature might address a self-interest threat. Next heading, non-compliance with laws and regulations. This is famously called as no-clar. In the course of providing a professional service to a client or carrying out professional activities for an employer, a professional accountant may come across an instance of non-compliance with laws and regulations. No-clar or suspected no-clar committed or about to be committed by the client or the employer, or by those charged with governance, management, or employees of the client or employer. Non-compliance with laws and regulations comprises of actions of omissions or commission, intentional or unintentional, which are contrary to the prevailing laws and regulations committed by a client or professional accountants employing organization, which is committed by TCWG of a client or employing organization, which is committed by management of a client or employing organization, or which is committed by other individuals working for or under the direction of a client or employing organization. However, NOCLAR under revised code of ethics does not address the personal misconduct unrelated to the business activities of the client or employing organization and non-compliance by parties other than listed out in the definition of NOCLAR. As per IESBA, following examples would be covered in NOCLAR: fraud, corruption, bribery, data protection, money laundering, terrorist financing and proceeds of crime, environmental protection, public health and safety, securities market and trading, banking and other financial products and services, tax and pension liabilities and payments. The objective of NOCLAR is that turning a blind eye to potential NOCLAR is not an appropriate response from professional accountants, while placing renewed emphasis on the roles of management and TCWG in addressing the matter. Further, it increases awareness and understanding among the professional accountant of their legal and regulatory responsibilities when they face NOCLAR. Some important facts about NOCLAR are given below. During the course of providing a service, NOCLAR will be applicable if a professional accountant encounters or is made aware of non-compliance or suspected non-compliance in the course of providing a professional service to a client. He is not required to investigate nor responsible for ensuring complete compliance. I repeat, during the course of providing a service, NOCLAR will be applicable if a professional accountant encounters or is made aware of non-compliance or suspected non-compliance in the course of providing a professional service to the client. He is not required to investigate nor responsible for ensuring complete compliance. Expertise of laws not required. A professional accountant is expected to apply knowledge and expertise and exercise professional judgment. Okay. A professional accountant is expected to apply knowledge and expertise and exercise professional judgment. However, he is not expected to have a level of knowledge of laws and regulations greater than that which is required to undertake the engagement. Whether an act constitutes non-compliance is ultimately a matter to be determined by a court or other appropriate adjudicative body. Certain matters expressly out of purview, matters that are clearly inconsequential or relating to personal misconduct pertaining to business activities of the client are not covered. Disclosure which is contrary to law not required. As per IESBA code, disclosure of the matter to an appropriate authority would be precluded if doing so would be contrary to law or regulation. Applicability of NOCLAR in India. Responding to non-compliance with laws and regulations applicable to professional accountants in service, section 260. Applicable to senior professional accountants in service being employees of listed entities. I repeat, section 260 is applicable to senior professional accountants in service being employees of listed entities. Senior professional accountant in services means those directors, officers or senior employees able to exert significant influence over and make decisions regarding the acquisition, deployment and control of the employing organization's human, financial, technological, physical and intangible resources. It is further explained that the senior professional accountants refer to key managerial personnel. Point number 2. Responding to NOCLAR applicable to professional accountants in public practice. Applicable to audit engagements of entities, the shares of which are listed on a recognized stock exchanges in India and have net worth of 250 rupee crores or more. For the purpose of section 360, audit or audit engagement shall mean a reasonable assurance engagement in which a professional accountant in public practice expresses an opinion whether financial statements give a true and fair view in accordance with an applicable FRF. NOCLAR versus SA 250. SA 250 is applicable only on an audit and not on other assurance engagement. However, NOCLAR is applicable on professional accountants in service and in practice. SA 250 talks to auditors' responsibilities for laws having direct effect on the determination of material amounts and disclosures in the financial statements, such as tax and labor laws and other laws and regulations that do not have a direct effect on the determination of the amounts and disclosures in the financial statements, but compliance with which may be fundamental to the operating aspects of the business. NOCLAR, while being alike to SA 250 till this point, is further ahead of it, in that it takes into account non-compliance that causes substantial harm resulting in serious consequences in financial or non-financial terms. SA 250 does not define stakeholders. No clause is related to effect of non-compliance on investors, creditors, employees as also general public. As per no clause, in exceptional circumstances, professional accountant might become aware of an imminent breach of a law or regulation that would cause substantial harm to the investors, creditors, employees or the general public. Having first considered whether it would be appropriate to discuss the matter with management or TCWG of the company, the accountant shall exercise the professional judgment and determine whether to disclose the matter immediately to an appropriate authority in order to prevent or mitigate the consequences of such imminent breach. If disclosure is made, such disclosure is permitted. This provision is not existent in SA 250. Applicability of no clause in India. Responding to no clause. In case of employment, in case of audit engagement and steps to be taken for responding, this you can view for yourself. If I read, it is going to confuse you. So just this diagram, please pause and see. Okay. Next one, it may also be noted that in a situation where disclosure ought to be made by the auditor, the appropriate authority for the purpose of disclosure will depend upon the nature of the matter. For example, the appropriate authority would be SEBI in the case of financial reporting, which is fraudulent financial reporting. Appropriate alignment has been made in the code with regard to requirements of confidentiality as required under Chartered Accountants Act 1949. Provisions of confidentiality under Chartered Accountants Act 1949. For members in practice, clause number 1 of part 1 of second schedule to the Chartered Accountants Act 1949, a chartered accountant in practice shall be deemed to be guilty of professional misconduct if he discloses information acquired in the course of his professional engagement to any person other than his client, so engaging him without the consent of his client or otherwise than as required by any law for the time being in force. For members in service, okay, for members in service, it's clause number 2 of part 2 to the second schedule of the Chartered Accountants Act 1949. A member of the institute, whether in practice or not, shall be deemed to be guilty of professional misconduct if he, being an employee of a company, firm or person, discloses confidential information acquired in the course of his employment, except as and when required by law for the time being in force, or except as permitted by the employer. Documentation requirements in no clause. Revised code over and above require the professional accountants to follow the additional document requirements as under. How management or TCWG have responded to the matter. The course of action, the accountant considered the judgments made and the decisions that were taken having regard to the reasonable and informed third party test. How the accountant is satisfied that the responsibility of public interest has been fulfilled. This documentation is in addition to complying with the documentation requirements under applicable auditing standards. SA, for example, require a professional accountant performing an audit of financial statements to prepare documentation sufficient to enable an understanding of significant matters arising during the audit, the conclusions reached and significant professional judgments made in reaching those conclusions, and document discussions of significant matters with discussions of significant matters with management, those charged with governance, and others, including the nature of the significant matters discussed and when and with whom the discussions took place. Document identified or suspected non-compliance and the results of discussion with management, and where applicable those charged with governance and other parties outside the entity.